Good afternoon, everyone. Welcome to Stock Market Today. My name is Ken Shreve, joined today by Justin Nielsen. On today's show, we're going to go over what happened in the stock market today. But before we do that, I want to throw it over to Justin, who, as usual, has got three stocks to watch.
Yeah, the theme right now really is about the stocks with some good relative strength lines that have held up during the correction. So if this is a rally that does lead to further gains, we've got some that are already starting off well. And so to that end, let's take a look at Dell, Eli Lilly, and XPO today.
Sounds good. Well, let's start by taking a look at the NASDAQ composite, which extended gains 7 days in a row up above the 50-day moving average. Not much volume in the market today, but Justin, with the NASDAQ up a whopping 6.6% last week, wouldn't have been surprising to see some selling today, and maybe it is a market that's looking a little overbought, but the NASDAQ is still showing strength here.
Yeah, I mean, as you said, that was a really strong week last week. And personally, I would have liked a digestion of the gains. We did get that to a degree. I mean, a lot of stuff really wasn't moving that much. If you look at the advanced versus decliners, decliners were well ahead of advancers on both the NYSE and the NASDAQ. Not in a huge way like we were seeing before, where it was like 5-to-1, 6-to-1, but still, definitely in favor of the decliners. So a little bit of a digestion here, and that's kind of what we were asking for. So you can't really complain too much when you get it. The main point is that we're not giving up the gains from last week, and there's more stocks that I feel like are setting up. Taking a little break maybe would be good for a lot of these stocks to potentially build a platform from which they can move higher.
Yeah, very much so. All right. So, breadth on the NASDAQ, not quite 2-to-1 negative. Let's take a look at the S&P 500. Breadth there was also negative, not quite 3-to-1, but almost a very similar looking chart here for the S&P 500. It's not up 7 days in a row. It's up 6 days in a row, but still holding above its 50-day moving average. And then take a look at the Dow here, which also managed a small gain. And boy, all these indexes look very much alike. The real weakness in the market today was in the small caps. You can see IWM was down, I think, more than 1%. At one point, down 1.2%, and mid caps MDY also struggled today with a 1% decline. But overall, not such a bad day. And the S&P 500, like I said, up 5.8% last week. So we'll see what tomorrow brings. Why don't we start by taking a look at
real
Dell.
quick, I just want to mention
Sure.
on the Russell 2000, as much as it stings to have a 1% loss, you got to remember that the Russell 2000 was even more powerful last week. I mean, it had gains of 2% back to back, whereas the other indexes were really kind of at 1%. So I think the bigger issue here is, again, when you've got big gains like that, it is normal to kind of take a break. The trouble that we're going to have to be aware of is that we are coming to a level of resistance, right? Whether you draw a line at these, at the 50-day moving average line, or for the NASDAQ and S&P 500, just drawing a line along the tops, we are getting up to that level. So now it's a matter of, can we break through it or not?
Yeah, that definitely applies with IWM, test of the 50-day moving average here, and also MDY. And I neglected to mention, that Russell 2000, like you said, Justin, last week up more than 7%. So big weekly gain for the small cap index last week. All right, mentioned volume pretty light in the market today. Let's start by taking a look at Dell, which is in a nice little setup here. DELL is the symbol here. We'll start with the daily chart.
Yeah, so I mean, one of the things that happened today was this was a breakout of your traditional double bottom base. You can see how that undercut of the 64.32 level happened, and now we just broke through the middle of the W, and that's our buy signal for a double bottom. So right there at 77.7. There's some positive comments from analysts about what the future looks like for Dell in terms of rebound in servers. Server buying, especially because of AI. They're looking at potentially like 15%. I thought I saw one analyst remark, as opposed to the 3 to 5% year over year numbers that they've been looking at previously. So there's definitely a fundamental story here. AI, they're very involved with the servers that do make AI possible. But more importantly, it's not just the story, but you're matching the chart action here too. There is definite demand here being shown. I think what we saw from the last earnings report was such a strong reaction. And then the fact that it was able to hold all of those gains and make this double bottom, which a lot of times double bottoms can be violent. This one was only 12%. So technically it qualified as a flat base too. So the fact that it held those gains, and you're also seeing right there that blue dot on the relative strength line, that means that this made new highs ahead of the price. And while the stock was still in a base. And so that's pretty strong action there too.
Yeah, definitely one of the better looking technical setups in the market here. You mentioned that gap up about 3 months ago when they reported earnings, and then just nice, relatively tight sideways trading along the 50-day moving average. We're going to hear from Dell in about 3 weeks, but a good relative strength line and a good breakout for the stock today. So let's move on and take a look at Eli Lilly. This is a leaderboard stock, and done well with it, and it is still acting well in this market here, finding support at the 50-day.
Yeah, so Leaderboard did up the position on this one, to a 3/4 position. So it is one of the larger positions on that model portfolio. And the reason is, well, let's take a look at the weekly chart. This has had a nice run. It's really held that 10-week moving average line for the most part. It's had a couple touches. So, you have to be careful of, buying when something has had multiple touches of that 10-week moving average line without forming a base. The last base was really, back there, a few months ago. So, and it was a flat base, one where it had really kind of retained the gains that it made from the breakout all the way back in the April timeframe. So, tight action, relatively maintained above that 10-week moving average line, and it's got a good story too. You've got not only the weight loss drugs that everyone is talking about now, but they also have Alzheimer's treatments that are going on that are showing a lot of promise too. So definitely a reason behind our interest in it on Leaderboard, and one of those big things that you can see right now. Again, relative strength line right there at new highs. This was one that was just holding up so well when the market wasn't doing well. As the market was making new lows, lower lows, this one was making higher lows. And that's one of the things I also like to see in stocks that I'm looking for.
Yeah, and a very good point about support at the 10-week moving average. You often see a stock breakout. You can see Eli Lilly broke out of this shallow little cup base here, and then it formed a little flat base up in this area here. And sometimes the stock will pull back to the 10-week line several times. In Lilly's case, you had a pullback right here. Let me see if I can get this to... this was a pullback right in this area here, and then another pullback a few weeks later. So this looks to me just to be the second test of a 10-week line. So it doesn't look too extended, but definitely a healthcare name acting well in this market. All right, let's go into the transportation sector and take a look at logistics firm XPO. Ticker symbol, not surprisingly, XPO. What do you see here, Justin?
Well, I'm glad you started on the weekly chart here, because I think you have to put the perspective of this big move that it had earlier this year and how well it's been able to, again, hold on to those gains. Yes, it did dip below the 10-week moving average line a couple times, but we're seeing it rebound very strongly right back. So it really kind of came out of this double bottom structure back in September, and it did fail. And so we did get back below the 50, back below the 10-week moving average line. And, you would have hit a 7%, 8% stop loss from that double bottom. But now we're retaking it. And so you have to sometimes be willing to buy a stock back. If it does end up, you might have had the right stock, wrong time. And given what was going on with the market at the time, and here again, the market was making lower lows. And this really held very well. It wasn't really making lows from those prior two areas. So this is one of the reasons why the relative strength was a little bit stronger on this. And now we're seeing another good move above its 50-day moving average line after earnings at the end of the month in October. And here we are today, kind of holding on to those gains. So something to watch. It's still in that blue shaded area. That's kind of showing you where a buy zone is from that double bottom that failed. But if we can hold here, this can potentially have another run.
Yeah, no doubt. And what was particularly impressive with XPO after 3 straight weekly declines, where it gave up the 10-week moving average, volume last week rose quite a bit. So definitely had a little bit of accumulation going on. And as a stock regains a buy point, if you see it happen with volume, that's even better. So right at the top of the 5% buy zone here. All right. Well, Justin, appreciate your insight as usual. We are in a confirmed uptrend still, but again, we're looking at a market that might starting to look a little overbought now. So at this point, we'll be just gauging what do the pullbacks look like. Are they happening in very, very heavy volume? Are we seeing distribution days, or are we seeing kind of low volume behind the declines going forward in the indexes? That's what the bulls want to see: heavy volume on the way up and then low volume on the way down. But still decent crop of stocks out there to choose from. So that'll do it for today. I think it's going to be Justin and Ed tomorrow for Tuesday's Stock Market Today video. So be sure to join them right after the close. That'll do it for today. Hope you have a great afternoon. We'll see you tomorrow.